Janice Lopez of the Women's Business Development Center joins us now with the keys to attracting investors to potentially put money into your startup. So thanks so much for coming on our show today.
Thank you for having me.
What do you think are the top tips here?
So the top tips to attracting investors is making sure that the funder has the right market fit, right? So you want to make sure that they understand the market that they're going into, whether or not they're addressing the need of the market, and will they buy the product or service. Then in terms of the funder themselves, are they a good fit for the company? Do they have what it takes to move the company forward? And are they coachable? An investor doesn't want to invest in someone that isn't willing to listen to them. And then finally, the last one is really taking a look at the investor and making sure that he's aligned with the company, and making sure that that he understands the market, that the market is big enough to go ahead and make that risk, that the investor can go ahead and get a return on investment right away, that the company can actually scale up, and then finally get out within a 3 to 5 year span.
You say that there are 5 C's that are key to follow if you own the startup. So what are those 5 C's?
They need to have cash flow. So what type of income do they currently have that can pay back this debt? The next one that they're looking at is capital. And so basically, what is their skin in the game? How much risk are they willing to put down? They can't expect to get financed 100% of the amount that they're looking for. They're looking for collateral. So if I'm giving you a loan for $80,000, what do you have that's worth $80,000 that I can hold on to till you pay me back? We're looking also at character. You know, does the individual have experience in the type of industry that they're getting into, or would they be a good business owner? And then also credit score. Credit score is key. Typically, they're looking at about a 680 credit score is what I've seen out there in the market. And finally, the last C is conditions. Understanding the industry and seeing if there's any economic factors that can impact their industry, therefore not allowing them to make payments on this debt.
Do you find with most startups that banks are willing to lend the startup money?
It's kind of hard to go ahead and get, I'm not going to say no, but it is difficult to get financing for startups just because there is no history. So typically, a person that's looking to get started is bootstrapping it, looking at friends, families, and fools, as I like to call it, to go ahead and invest in their business. And then finally, looking at organizations that provide microfinance programs.
Such as angel investors, right?
Yes, or the organizations that have a loan program.
Thank you for coming on the show.
Thank you very much.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.